Today we are going to take a look at the Dow Jones from order flow, a fundamental and a technical perspective, and then look for the best probability of how we can take this opportunity on the market. Now, if you are new to the channel, a sub would be appreciated as to provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm so the video can reach more people that needs the free education as well. And let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now, if you're new to the channel, I've been speaking about the stock market for quite some time. When the market was trading at this level, explaining all of the reasons why we could see that meltdown back in January. And I will leave a link to that video in the description, or I'll get it to pop up here somewhere, and you can go check out that video also, and maybe just for a further reference for yourself as well. Now we are going to start with the technical analysis, because I know a lot of people are wondering why the stock market is falling, but it's quite clear, and I think we know why the stock market is falling. There is no more question about that, right? But if you start on the monthly time frame, what do we have now? Firstly, we can see the market is now finally in bearish territorial. Now the market, as we remember, had created strong level of support got broken. It came to test it as resistance. This resistance got broken aggressively, and we can definitely expect the Dow Jones to come back to that level and hit that level before we can see any pullback happen in this market as well. Now we are going to use this as our overall target level in the market also. Now it's very important that you do stick with the video up until the end, because a lot of people tend to miss information when that I do give, and then I get the questions in the comment box there as well. So just make sure that you do follow the video right through, so that you don't miss anything as we move along as well. So we are going to use this as a take profit level in the market, also as a long-term take profit. Now from a weekly perspective, what do we have here? Now firstly, we can see how this market obviously is currently trading below a very strong structural area here in the market as well. Now this level over here had basically protected the Dow Jones, as it was a strong level of support. I can see the market only tested that level a few times, unfortunately, due to tighter monetary policies, which is something that we are going to get to, which I will explain. The market was unable to hold, and the market had now broken below this previous level of support. That's now once again turned resistance there as well. Now if you drop down on the daily time frame, what do we see? Now here from a daily perspective, it's clear that the market had printed this massive impulse. Now after an impulse, you expect a correction before the continuation to the downside, and we would like to ideally see a pullback to the 0.382. This was also the last level of support that the market created, and once support gets broken, it then becomes resistance there as well. So definitely a pullback expected before we could potentially see a further continuation to the downside. Now after an impulse, you expect that correction. Now if you take your Fibonacci from the high to the low, we do have a 0.382 pullback, which gives us a confirmation that we could potentially see the market pull back from exactly where it is now to go and test that previous level of resistance. That was one support, and then definitely start seeing that continuation to the downside there as well. Now coming back on the weekly time frame, we can also see the market is testing this structural level over here, which gives us a further confirmation that we can expect the market to pull back before the continuation starts taking place. Now next up, we are going to look at the stock market overall. Now you can see the Dow Jones is down minus 0.57% today. S&P 500 also down 0.21%, and the Nasdaq, which is the company that consists of 100 tech stock companies, is holding on to dear life there with a 0.29% and counting, which is also probably not going to last very long for the Nasdaq also. So we can see overall the stock market is quite bearish as well. Now if you're going over and look at, now this is where the good stuff start, right? This is where you kind of get an indication, or not kind of get an indication, but this is where you start getting an indication in regards to from a fundamental perspective. So just to make sure that you understand what is going to move the market next, and also going to help you in terms of your skill as well. So what we can see over here, it says your Wall Street main index turned lower on Tuesday, which is today. The volatile trading as bank and mega cap growth stocks slump and concerns over aggressive monetary tightening and slow economic growth. Now, if you are not aware with what sorry, if you're not aware with what monetary tightening means, it simply means that it's when the Federal Reserve starts hiking interest rates, and stock markets typically aren't moved as much by the data that we are going to take a look at after this, which is the CPI data. Now, a higher CPI number means you can potentially expect, not potentially, but you can expect the Federal Reserve to hike interest rates higher, which tend to negatively impact the stock market. But stock markets are not that much moved by CPI, which is the Consumer Spending Index, but can be, since higher interest rates can cause business activity to slow in general. So stock markets, so in general, the stock markets prefer lower CPI that allows consumers to keep spending and businesses to continue investing. And we're going to go over that data that is being released tomorrow, which is going to be the key contributing factor to what it is that you need to look forward to understand whether or not the market is going to continue lower as well. Now, yeah. So now that we're done with that, so basically what you're seeing in the market at the moment is basically the fear of the Federal Reserve that is going to aggressively tighten the monetary policy. But the only way we can see that is by the CPI data that's going to be released tomorrow. We're going to speak about that right now. You can see the headline here from Reuters: S&P 500 ends below 4,000, which is part of the tech or the stock company. It says here the S&P ended below 4,000, but not that much interested. But just so you guys know that the overall stock market is bearish at the moment. Now, tomorrow we do have the USD CPI coming out, and as you can see, the previous was 1.2. The forecast is 0.2%. If and only if we do get a 0.2%, or if we do get anything lower than a 1.2%, that generally means good. Then you can definitely expect the stock market to move to the upside, because like I said, now the stock market, they prefer lower CPI because that allows consumers to keep spending. A higher CPI means higher interest rates, and that can cause business activity to slow down, because when the CPI is low, then the Federal Reserve is less likely to hike interest rates, right? Meaning that consumers are likely to spend more when the interest rates are low. But if the CPI is high, then that means consumers but if the CPI is low, that will definitely encourage consumers to spend more. So we will be looking for some lower numbers to come through as well, because that would basically tackle inflation, because CPI numbers is used to look at inflation there as well. Now, next thing we are going to look at is the order flow data, so the commitment of traders, and this tells us what the biggest banks, hedge funds and institutions are doing in the market. And for the gentleman who asked me where I get this data from, there's the Telegram link that you can just go and visit down here. But basically what we can see here, based off last week's report, hedge funds came in, added 311 long or buy positions. They also closed minus 2,293 selling positions. We can see the overall net positions had increased from minus 7k to now sitting at 2.6 thousand, which once again gives us a further indication that there is a slight possibility that we can expect the Dow Jones to pull back before that continuation to the downside. Now that's all from my side. Thank you for your time. Thank you for the support. And as always, cheers for years.